Hello guys! So for today, we will focus and discuss on doing a financial plan for your business plan. Learning objective. At the end of the learning session, the students will be able to prepare projected financial statements for the business. What is a financial plan? Financial plan accumulates and describes all the data expressed in monetary units from the other sections of the business plan. Financial statements in the financial plan are all projected. The financial section of a business plan is one of the essential parts of the business plan. It refers to the capital investment and sources of funding in the operation of the business. This section will show you the financial projections over a period of 1 year and 5 year program and shall determine the rate of return of investment. Having a financial forecast will determine whether an entrepreneur's idea is viable for a successful business. It will also help in comparing the costs and benefits over time to determine whether a project is profitable or not. Different financial statements in the financial plan. We have the statement of comprehensive income or the income statement, statement of financial position or the balance sheet, statement of cash flow, and statement of changes in equity. Let's start with the statement of comprehensive income. It is a structured financial statement that presents the income, expenses, and the net income or net loss realized during a certain period. The income statement is sometimes referred to as profit and loss statement or P&L. It reports the success or failure of the business during the period. Let's check out the definition of terms. Sales or revenue is the money received in exchange for goods or service. Income or profit, whatever is left from the sales after deducting cost and expenses. Cost of goods sold or COGS are direct expenses relating to producing the goods, such as direct materials, direct labor, overhead. Expenses. These are the necessary spending to operate the business. This is the format of a statement comprehensive income. Don't forget the name of the company, the label of the financial statement that you are making, and the date. And here are the other components that you can see in an income statement. This is a sample of an income statement. This is another sample of income statement that shows forecasting period, and this is what you will include in your business plan. Statement of financial position. It is also known as the balance sheet. It shows the financial position at a specific point in time. It also indicates the money health of a business. The components of a balance sheet includes assets. These are the resources that are expected to provide future economic benefit. It can be categorized as current or non-current assets. Liabilities. These are obligations that the company must pay in the future. It is also categorized as current or non-current liabilities. Owner's equity can be thought of as the source of company's assets. It is also referred as the book value of the company. This is the format for the statement of financial position. Don't forget the company name, the label of the financial statement that you are making, and of course, the date. Don't also forget the different components of the balance sheet. Now, the equation for the balance sheet is simply equal to the total asset is equal to the sum of the total liabilities and total owner's equity, and they should always be balanced. This is a sample of balance sheet. And as you can see, all of its total assets is equal to the total liabilities and the shareholders' equity. Next, let's talk about statement of cash flow. It shows the sources and uses of cash over a period of time. It shows the effects of a company's operating, investing, and financing activities on its cash balance. The principal purpose of the statement of cash flow is to provide relevant information about the company's cash receipts and cash payments during a particular accounting period. Components of statement of cash flow includes operating activities, investing activities, and financing activities. Generally, changes made in cash, accounts receivable, depreciation, inventory, and accounts payable are reflected in cash from operations. Changes in equipment, assets, or investments relate to cash from investing, and cash from financing activities includes the source of cash from the investors or banks as well as the use of cash to pay shareholders. Format for the statement of cash flow. Don't forget the company name, the label of the financial statement that you are making, and of course the date. Don't forget to put the different components needed in the cash flow. This is a sample of income statement. Now, let's check out the statement of changes in equity. It shows the changes in stockholders' equity over a period of time. Equity, in the simplest terms, is the money held by a company's shareholders that is invested in the business. It constitutes the part of the total capital of the business. It is the amount of money that represents ownership of a business. The purpose of this statement is to convey any change or changes in the value of shareholders' equity in a company during a year. This is the format for the statement of changes in equity. Don't forget the company name, the label of the financial statement that you are making, and the date. Now, please don't forget to include the different components needed in the statement of owner's equity. Some of the components and details of the owner's equity is coming and actually reflects from the balance sheet and the income statement. This is a sample of the stockholders' equity. Now, are you ready to create and prepare your financial plan? So one of the things you should do in your business plan is to prepare a pro forma statements, which are projections of a firm's financial position during a future period, pro forma income statement, or on a future date, pro forma balance sheet. In the normal accounting cycle, the income statement is prepared first, followed by the balance sheet. Similarly, in the preparation of pro forma statements, the pro forma income statement is followed by the pro forma balance sheet. For your business plan making, you will focus more on creating and preparing the income statement of your business. After watching this video, please answer the activity for financial planning. Thank you so much.